Okay, so we're not talking about some slow, gentle market shift here. We're looking at data suggesting, well, a potential flight from fiat currencies,
Hmm.
followed by a really explosive rally in hard assets.
Exactly. And yeah, gold has hit some key records lately, but our sources, they're really pointing towards silver being primed for what some call a slingshot
A
move.
slingshot, you mean like potentially $100, maybe even $200 an ounce silver? That sounds pretty extreme.
It does sound extreme, but that potential is really rooted in just one, frankly, irrational number right now. The gold to silver ratio, the GSR.
Ah, the GSR.
Yeah, it's sitting at about 85 to 1,
Wow.
which is, well, it's a massive distortion. When you look at the history, analysts like Andy Schetman, they see this as a rubber band stretched way too tight. It's about to snap back.
Creates a huge opportunity then,
A
potentially.
generational one? Possibly.
Okay, so if you want to stay ahead of this curve, understand these shifts before they make headlines, definitely subscribe to Credvia now. Don't miss out.
All right, let's unpack that GSR a bit more for everyone. It's pretty simple, right? Just how many ounces of silver you need to buy 1 ounce of gold.
That's it. And historically, for decades, that average number has hovered around, what, 40 to 1? Maybe 42 to 1.
Yeah, somewhere in that range.
But so seeing 85 to 1 today, that's why it's so startling. And what's really fascinating is how disconnected the market price is from physical reality.
How so?
Well, geologically, when miners pull metals out of the ground, silver comes out at a ratio closer to like 7 to 1 compared to gold.
7 to 1, but the market's trading it at 85 to 1.
Precisely, that huge gap. That's why you hear experts pretty much across the board saying silver is maybe the single most undervalued asset out there right now.
Okay, and we've seen gold making moves, right? Sources projecting maybe $3,800 soon. Shows momentum's building. It does, but the pattern historically is that silver tends to lag behind gold initially, and then it just takes off, accelerates much faster by percentage.
And that collapses the ratio really quickly.
Almost instantly sometimes.
Yeah.
That acceleration, that's what momentum guys like Michael Oliver call upside verticality.
Uh-huh. Market jargon for. Straight up.
Pretty much, yeah, a parabolic move. If silver moves like it did in past big runs, think 1980 or 2011, well, $100 an ounce looks entirely possible. $200 isn't even off the table given how stretched things are.
But hang on, history's full of big calls that didn't quite pan out right. What's the pushback? Why wouldn't the ratio just kind of drift back to maybe 60 to 1 instead of this violent collapse?
That's a fair question. And that's where the fundamentals come in. And they really seem to make this time different. There are like 4 key things underpinning this.
Okay, what are they?
First, industrial demand. It's not just jewelry or coins anymore. It's surging. Think solar panels, the EV market's booming. And interestingly, new solid-state batteries. They actually need more silver, not less, so demand is locked in and growing.
Right, huge industrial demand. What's second?
That demand is hitting a supply wall. People forget silver is mostly a byproduct. You get it when you mine for copper or zinc, mainly.
Ah, so you can't just decide to mine more silver easily.
Exactly. You need to mine more copper first, basically. So supply is tight, it's constrained.
Okay, demand up, supply tight. Third.
Third, and this is maybe a game changer, the U.S. government has officially designated silver as a critical mineral.
What does that actually mean?
It signals they see the supply as strategically important. It kind of puts an implicit floor under the price, government attention.
Got it. And fourth.
Big money is noticing. We're seeing signs. Major institutions, even the Harvard Endowment Fund, apparently, are starting to take positions quietly. Add that to central banks buying gold like crazy. The big players are moving into metals.
Wow, okay. So the forces are really aligning here. Demand, supply, government view, institutional interest. It sounds like the time to prepare is definitely now before everyone else piles in.
Seems that way.
And look, if you find this kind of deep dive into market drivers, valuable, actionable stuff, please remember to subscribe to Credvia. You don't want to miss the next update on this. So with all these powerful factors lining up,
Yeah.
how does someone listening actually play this? How do you plan a move without, chasing the market after it's already exploded? Seems like the window might be closing.
Yeah, discipline is key here. Planning is everything. This shouldn't be an all-in panic buy situation or an all-out panic sell either.
Right.
There's a proven strategy. People like Andy Schetman used it successfully back in 2010 when the ratio collapsed last time. It involves using the ratio itself, not just the dollar price, as your trigger.
Okay, using the ratio. How does that work in practice, like a rotation?
Exactly. It's about taking profits on silver in stages as the ratio drops and then rotating those profits into gold.
Can you have an example?
Sure. Let's say you got in when the ratio was high, like 85 to 1 now. Maybe when it drops to, say, 60 to 1, you sell maybe 30% of your silver and use that cash to buy gold.
Okay.
Then maybe you do it again when the ratio hits, I don't know, 45 to 1. Sell another chunk of silver, buy more gold.
Ah, I see. So you're locking in the silver gains relative to gold as the ratio corrects.
You got it. You lock in those gains from silver's faster move, and you shift into gold, which tends to be more stable long-term as things normalize. It prepares you for the next phase.
Okay, let's try and sum this up for you listening. This gold to silver ratio, sitting at 85 to 1, it just won't stay that irrational forever. History suggests the correction, the rally, when it comes, could be really violent and fast.
Yeah, potentially collapsing that ratio by half, maybe in just a matter of months.
So the message is, don't wait for the mainstream news. By the time you hear about $100 silver on TV, the really big easy gains, they'll likely be gone.
Absolutely.
Yeah.
And if you zoom out, just for a final thought, think about the bigger picture. Geopolitical instability, massive global debt, a potentially weakening dollar.
All happening right now.
Right. We might actually be watching the very beginning of a major shift, a shift where precious metals like gold and silver start regaining their core role in the global monetary system, something fundamental changing.
A provocative thought indeed. Stay sharp, everyone. Stay prepared. And one last time, make sure you subscribe to Credvia right now to stay ahead of what could be an absolutely explosive move.